Here we're going to take a look at doing payroll for the Pony Rides to Go project. The first payroll that we have is on April 6th, and we're told that Sally had 25 hours and Derek had 20 hours and that you had 20 hours, and the check numbers that go with that: 2265, 2266, and 2267. So we're going to take a look at the April 6th payroll register, and here is our Excel files for our payroll registers. And we're going to make sure that we're on the correct one. Notice there's tabs along the bottom: April 6th, April 13th, April 20th, and April 27th. And so we want the April 6th one, so that's the first one. That's the page that we're on. It also says at the top of the page for week ending, April 6th. And so we have two ways of making sure that we're on the correct payroll register to begin with. Now, when we're taking a look at the payroll register, there's a variety of columns here, and we need to know what they mean. Here is the first column, tells what that person, that employee, signed up for on their W-4 form, whether they're married or single, or how many allowances they have. And we use that to figure out the federal income tax that we have to pull out of their check. And so that's listed there. And then the employee's name, of course, your name would be here under the U. Okay? Beginning cumulative earnings tells us how much wages, gross wages, that employee made from January 1st to whatever is today, in this case, April 6th. So it doesn't include today's gross wages, but it includes up to the check that they got before today. And so Sally has $9,500 and Derek has $3,000. And you just started work this week, so you have zero from January 1st until now. We're going to use these to help figure out this FUTA and SUTA calculation. The current earnings is the gross wages. Okay. It's the same thing. And so Sally, Derek, and you all got $12 an hour. And so Sally had 25 hours, remember, from the narrative. So 25 hours times $12 an hour gave her $300. Derek had 20 hours and you had 20 hours, and 20 hours times $12 an hour is $240. So you each have gross wages of $240. The ending cumulative wages is to take the beginning cumulative earnings and add whatever gross wages they're getting for this pay period, and that's their ending cumulative wages. Now these numbers will then become next time's beginning cumulative. So Sally has 9,800 ending cumulative, and if I take a look at April 13th, here's 9,800 in her beginning cumulative. Okay, the taxable earnings of unemployment, that takes a look at these cumulative earnings, and anybody that is making less than $7,000 of gross wages so far this year, which includes Derek and yourself, the employer has to pay, Camille has to pay FUTA and SUTA on those people. And so this says how much of the wages are taxable for FUTA and SUTA. And so $480 total is taxable for FUTA and SUTA, and there is our calculation. FUTA would be 480 times 0.008, and the SUTA would be times the SUTA rate that was told to you in the narrative, and also times the 480. Then we have our various deductions. We have FWT, which means federal withholding tax, or is also called FIT for federal income tax. Here's our Social Security, our Medicare taxes. Together, those are FICA, okay? And if I add the FWT and the Social Security and the Medicare, those three together, that gives me my total deductions. So for Sally, she had $2 for federal income taxes, $18.60 for Social Security, $4.35 for Medicare, and so if I add those three together, $24.95. And so I would then know that that's how much is going to be total taken out of her check that we're going to then turn around and owe to the IRS. The federal income tax, we use the tables from the Circular E that the employer gets, and the Social Security is 6.2% times her gross wages of $300, and the Medicare is 1.45% times her gross wages of $300, and that's where those numbers come from. Here, the payroll register is already done for you, so you don't actually have to do it yourself. And so our total deductions of $24.95 are subtracted from the total gross wages, in this case of Sally's of $300, and that gives us the net pay. So $300 minus $24.95 is the $275.05. And we would do the same thing for Derek, and then again for yourself. And then we're going to total up the net pay, and we get $683.33. We're going to total up the total deductions, we get $96.67. We total up the gross wages, and we get $780. Those three numbers are the numbers that we're going to use to do our journal entry. And so when we go to do the journal entry, we know that we're going to put the date in, and then we're going to debit wages expense for the gross wages. So in this case, that would be $780. And of course, we would be putting this on our accounting paper. Then our total deductions is what we took out of the employees, and we owe it out to the IRS. And so we're going to use a liability account called payroll tax payable. And that is $780. Oh, I'm sorry. Okay, that is our total deductions, $96.67. Then we have a credit to cash for the net pay. We actually wrote checks out to the employees totaling $683.33. And so I'm going to credit cash for the total of the net pay, $683.33. I have to make sure, do my debits equal my credits? So if I add $96.67 and $683.33, do they equal $780? Yes, they do. So I'm going to put my explanation under there to say that I'm recording payroll for April 6th. Okay, so once again, the gross wages goes to wages expense. The total deduction goes to a credit to payroll tax payable, and the net pay goes to a credit to cash. Okay, so as you go forward, you're going to do the same thing. There's only those three numbers you need for that first journal entry for payroll. As we know, every time we have payroll, we have two journal entries. So we need a second journal entry where we're recording the employer's cost. And that also has already been done for you. The employer has to match the FICA. So you see the Social Security is $48.36. That's the same as this Social Security. And the Medicare, $11.31. It's the same as what we took out of the employees. The employer has to come and match that. And so so that's where those two come from. And then the FUTA and SUTA is calculated, as we discussed before, on their unemployment, the employer's unemployment taxes. Okay? And so we add that up and we get a total employer cost of $75.03. And so we're going to have a second journal entry. Of course, we'll put in the same date, April 6th in this case, and we'll debit payroll tax expense for that total, $75.03. And we're going to credit, because we owe this out to the IRS. The employer's not paying it today. They're going to pay it next month. So we're going to say payroll tax payable is our credit of $75.03. And then you'll have an explanation, and on your explanation, you'll say to record employer costs of April 6th payroll. The only other thing is that on the explanation, up on this first journal entry where you credited cash for the $683.33, that meant I wrote checks totaling $683.33. And I have to say what check numbers in that explanation. I have to say what check numbers did I use. Okay? And so you were told that in the narrative. Sally is check number 2265, Derek is 2266, and you are 2267. So as part of this explanation, we're going to say check numbers 2265 through 2267. Also remember that you have to take a look at this check register, because this now involves cash. And so here we had where we put the check number 2265, April 6th, Sally Sinclair, 275.05. And we would also have to go ahead and put Derek's check of $199.64 and your check of $208.64 on that check register. At this point, you've now done the two journal entries for payroll, and you have done the three checks separately onto the check register.